Hello everybody and welcome back. In this video I want to talk about two quality stocks to buy now. Stocks that have fallen but they are of great quality. The two stocks we are going to talk about are Emcor and Lotus Bakeries. Okay, if that's interesting to you, you can stay. I believe these are two good companies, great companies, and the stocks have fallen, so it's a great buy. And I think the valuations are reasonable for these two companies. So in this video, I want to cover these two. We'll talk about the numbers, we'll talk about the valuation and the growth rates in the future. So you can make an informed decision whether you want to buy them or not. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I've been following these two companies for a while, and maybe I will buy them. So yeah, I will tell you first what Emcor does. It's an HVAC company. It's a boring company, and not a lot of people talk about Emcor. It's a mechanical, electrical company in the US. And this is a company that has been thriving for years. And now, as you develop more data centers, you have this big ramp up capex data center expansion, they benefit because you will need much more mechanical stuff, manpower, electrical businesses, and Emcor is benefiting. Let me read the description so everybody understands. Emcor is a specialty contractor in the US and a provider of electrical and mechanical construction and facilities services, building services, and industrial services. Its services are provided to a broad range of commercial, technology, manufacturing, industrial, healthcare, utility, and institutional customers through approximately 100 operating subsidiaries. So it's not only data centers, right? Before the data center ramp-up plan, they were already thriving and profitable with good margins, right? So in case there is a bubble in AI, in the data center expansion, they will still be fine because even in the world before AI, they were a very good business. Okay, so it's a good risk-reward opportunity because even if we crash, even if we have a huge bubble in AI, they will be fine. The company's operating subsidiaries are into the US. Okay, fair enough. Let me show you how profitable this business is. If I scroll down on Guru Focus, you will see great things. You will see revenue that is up and to the right, as you can see here in blue. You will see net income up and to the right and accelerating. You will see that this company has no debt. Look at the cash here in green. Look at the debt here in red. You have a company that has no debt problem, a clean balance sheet. A second point that confirms the thesis that this business will be fine. In case AI is a bubble and we have a major crash and the capex for the Magnificent 7 slows down, the data center expansion slows down, Emcor will be fine. They don't have any big debt to repay, right? Same thing for the free cash flow, it's up and to the right, and the company has been doing buybacks meaningfully, okay? In 2022, the company generated so much free cash flow, they bought back 10% of their shares, okay? Every year, you have a small buyback program, 1, 2, 3% of their shares. They have a competitor that is more famous, and maybe you know it, called Comfort System. Comfort Systems, same thing. HVAC company, mechanical, electrical stuff, and the stock is a beautiful investment. If you had invested in this stock, the chart is up and to the right. It's a 30 bagger in 10 years, and Comfort System has a small little brother, and this little brother is Emcor. And the reason I want to highlight Emcor today is for Comfort System, the valuation is high. The forward PE ratio is 32. For this kind of business, it's high. For Emcor, the forward PE ratio is 23. Okay, so we are talking about the same trend, same industry, almost the same growth rate, almost the same margins, the same tailwind. The business is still as good as Comfort System, the big brother, but the valuation is much cheaper. instead of a P ratio of 30, you have a P ratio of 20. And there is another difference between Comfort System and Emcor. That's the capital allocation mindset. Comfort System is focusing on acquisitions. It's a serial acquirer. They are acquiring more companies, diluting the shareholders a little bit. Emcor is not doing this. They don't rely on acquisitions to grow. They grow organically, and as I told you previously, the majority of the cash flows are going into buybacks. So it's a much more simple investment thesis. So now you may say it's a boring play. It's a boring play. Over the past 10 years, it's a 10 bagger, it's a 12 bagger. Yes, it's a boring play, but let me show you the numbers. I'm on Stock Unlock right now. Great website. If you want to use Stock Unlock, you have my link in the description to get a discount, like a 10% cheaper, something like this. For the past 10 years, here are the growth rates for this company. You will be shocked because nobody knows this business very well, but it's one of the best businesses you can invest in if you want to benefit from AI without crashing in case AI is a bubble. For the past 10 years, the revenue of Emcor has grown at 9% per year. Annually, the CAGR, the compound annual growth rate, has been 9% per year. The operating income, the EBIT, has been 19% per year. The difference between these two lines are more margins, okay? Better profitability, better efficiency, more margins. The net income for the past 10 years has grown at 22% per year. Now it gets interesting, right? The difference are the taxes and interest, okay? As I told you, the company doesn't have a debt problem, so it's fine. The free cash flow has grown at 20% per year, same thing. Add to this a small buyback program of 3% buybacks every year, and you have a diluted earnings per share going up by 25% per year for almost a decade. A free cash flow per share going up by 23% per year. And in the very long term, stock prices follow earnings per share. Stock prices follow free cash flow per share. You are in front of a company that has grown the free cash flow per share, the earnings per share at 25% per year. So the stock price in the very long term is going to grow 25% per year. And this is the reason why Emcor has been such a good investment in the past, because the fundamentals of the business have grown massively. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. And if you think AI is here to stay, if you think the capex from the Magnificent Seven is going to increase, if you think the economy is hot and the AI investment will continue for 1 year, 2 years, 3 years, Emcor will benefit. Maybe Emcor is in the top 5 best opportunities in the picks and shovels in the AI world. As you can say, we are in a gold rush right now with AI. You don't want to invest in gold companies. You want to invest in companies that are selling shovels. Emcor is selling shovels. So Emcor will benefit if the AI trend accelerates. And Emcor will be fine in case the AI trend is a bubble, because as I told you previously, they don't have any debt problem. This is a very good risk-reward opportunity. The only thing to check is the valuation, right? The valuation, I think, is okay. You are at fair value for a period of 23 because the company issued guidance for next year. The guidance is fine. And I want to mention Emcor today because the stock has dropped. The stock reported earnings a few days ago and the stock went up immensely. And then after earnings, it dropped minus 15%. The guidance was fine. The numbers were fine. I checked everything, but the stock went down. Okay, so maybe you have a re-rating, maybe the stock will go up to all-time highs. I've been following this company for a while now, and yeah, I think it's very interesting right now. It's a potential good stock to buy, very high quality, okay? And I think you can outperform if you buy Emcor. Well, I'm not 100% certain, but I think the odds are pretty good for Emcor right now. The second stock I want to mention today, if you want to continue the due diligence at home, is Lotus Bakeries. So We are not about AI right now. It's not about AI at all. They sell biscuits. They sell biscuit companies, the speculoos companies, the Biscoff companies. Very boring. Lotus Bakeries is a Belgium company. They produce and sell snacks under a range of brands. So maybe I can show you some slides so you understand better what is happening. It's a boring play and they don't care about AI. Let me show you some slides so you understand the culture of this company. I'm sure you have already tasted their biscuits, the Biscoff brands, the Lotus brand. You are about, the speculoos brand, Biscoff brand. Wonderful. If you have not tasted these biscuits, please try them. They are available everywhere in the world. And basically the company is very simple. Extremely simple, I would say. They sell a couple of biscuits. They don't innovate that much. They sell more biscuits every year. They have a brand, so they have pricing power. They have the ability to raise their prices every year. And if you drink a coffee, Lotus Bakeries biscuit will help add more sweetness to your taste. And the investment thesis is one of the simplest you can have, actually. Now let's talk about the numbers, right? Because this is what is interesting to us. Investors who want to focus on the numbers, let me show you what are the growth rates for this company. If I'm on Guru Focus right now, the margins are high. The revenue is up and to the right. Look at this in blue, up and to the right. The net income is up and to the right. They have a little bit of debt, but that's fine. They have a net debt of $140 million. And now the free cash flow, given their expansion, is $60 million. So the business is fine when it comes to debt. No major dilution, no major buyback. And now they are reinvesting to add more facilities, more manufacturing plants in Thailand because the demand is very high for their biscuits. So the free cash flow will go down because they are reinvesting in capex. But this is the best problem you can have for such a company. They are seeing a lot of demand and they can't supply their biscuits to everybody. So they have to reinvest to having more production, more manufacturing plants to sell more biscuits. Well, this is a very good problem to have. So the reason why the stock is down right now, as you can see, we are a stock down 40%, is a temporary problem that will be a tailwind in the future. Well, as you can see here, the free cash flow is fluctuating here, but that's fine. We'll talk about the earnings, okay? For the past 10 years, the revenues of this business have grown at 13% per year. The EBIT, the operating income, has grown at 14% per year. The net income has grown at 14% per year for the past 10 years. It's a boring company, guys. They sell biscuits and they have been growing 14% per year. I mean, you could have invested in this one and delivered a better performance compared to major European indices, compared to the S&P 500. Add to this no buybacks and you have an earnings per share growth of 14% per year. So the business is expected to grow roughly in the same range, 14% per year. If you want to add a quality company to your portfolio that has nothing to do with AI, you can invest in this company. You can invest in Lotus Bakeries that will add stability to your portfolio. And in the past, a couple of months ago, the company was expensive. This is the reason I did not buy it. A couple of months ago, September 2024, the company had a forward PE ratio of 60 because people like the sustainability of the returns. You see, as I told you, this is a company that is going up and to the right. No major issues, no major competitors. They have a brand, they are in a niche product, they are not innovating, they are not changing the world, they are not embracing AI. They don't care. They care about selling more stuff, more biscuits to more countries, and that's it. That's it. A very simple business idea. And people reward this simplicity, right? And for some reason, people were willing to pay up forward PE ratio of 60. And it went down meaningfully because of this new capex expansion in Thailand and because of a re-rating, because the valuations don't grow to the sky, right? So we went from a forward P ratio of 60 to now 35. I believe now we are reaching fair valuation. The last time we were at this valuation were here in May 2022. That was the bottom. And that's basically it. So for the after COVID level, maybe the valuation can continue to drop at the valuation we were before COVID, right? Before COVID, the forward P ratio was 25, 30, something like this. So maybe the valuation can go lower than this. Maybe not. If you look at this new environment after COVID, with the new pricing power, with inflation, maybe this is the new low. So now you choose. Either you pick the bottom, the local bottom now, because we are at now a fair valuation for a quality business, or you want to greed a little bit and wait. Depends on you actually, depends on your risk reward. But I believe now the stock is hated. Nobody wants to touch this stock because the stock has dropped 40%. You had a huge re-rating, but the business is fine. And actually, I'm following the earnings for Lotus Bakeries. It seems like things will accelerate for Lotus Bakeries. I may make a video about this one, but the earnings are likely to accelerate for this company. Okay, more expansion, more plans, more pricing power. Things are very bullish, and I believe now maybe it's a good time to buy. So yeah, that were two quality companies that are dropping and that were potentially good buys in November 2025. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.